Thanks so much for tuning in to the Real Estate Today podcast. Right now, let's discuss timing.
I'm Bob Nelson, real estate investment broker with Pacwest Real Estate Investments.
And I'm Marcia Edwards, residential broker with Windermere Real Estate. We're going to get schooled a little bit today by the expert and guru in investment property, residential specifically, with Bob. Wanted to talk to you, Bob, about some mistakes you've seen people make. One that you mentioned before the microphone came on today was that marketing timing is everything, that you really make your money in investment when you purchase it, not when you sell it. How does that apply to investment property?
Well, it's interesting. That's an absolute adage. That's my dad used that. I've used it for quite a period of time. It's what you buy and how you buy it that dictates what you will later sell. And of course, it's when you sell is when you're observing the profit that occurs. So if I have purchased a good property, I'm going to have something called a good property when I turn around and resell it. There's going to be more than one person trying to buy it. They're going to upbid the offers that they make, and I'm going to be very satisfied that I made good choices in my acquisitions.
And let's talk about absorbing a mistake in a purchase. So you did not do a great job of negotiating, or you looked over something and said you'd absorb that problem, solve it during your ownership, and you did not. What do you have then for your sales side?
You look at it this way. If I paid a little bit too much for a property, it's much like buying the thing a year from now at the price that it would have been worth at that particular point in time. So I dilute my rate of return, but as long as I am in an appreciating property, one that goes up in value, has appeal to tenants, has appeal to, as far as maintenance and repair is concerned, it's an attractive asset. Maybe I have paid too much for it, but at least I own the opportunity to make the excess profit that's going to come as a result of all of those positive things that existed that I overvalued and paid a little bit too much for.
So you observed it, but you offset that over time with other benefits that made it worth it to you.
Right. However, my rate of return, and rate of return is calculated on an annual basis, I would have to say that my rate of return was very, very low in the first year, potentially even zero if I paid next year's price for the thing.
So there's that, and then if you could solve the problem during your ownership, there's something that was, you didn't have laundry on site or something that was a hurdle in renting. If you can solve that, that could make it so you don't have to absorb that.
That's right.
Challenge.
That is exactly correct. If it had the potential of being good by some changes, and I did those changes, I've just offset the overpayment.
I'm Marcia Edwards, Windermere Real Estate.
And I'm Bob Nelson, real estate investment broker with Pacwest Real Estate Investments.